Hello and welcome to Crypto Weeklies. Today we are going to talk about Solana. The reason we are going to talk about Solana and its token Sol is because per our performance heat map, this is the crypto of the day based on some of the key performance time period over the last 24 hours, slightly down by 2.5%, 7 days up by about 11%, 30 days 39% growth, 90 days 21% growth. You can see Sol has been consistently over here in the number 2 spot over here over the last 30 days has been in one of the top gainers by about 35% the top spot, and over the last 90 days as well with 21% gain somewhere over here in the top 2 to 3 spots. This is again comparative performance, gets updated every single day. You can see over here Sol slightly down today by about 2.5%, but over the last 7 days has had a decent performance. Price at around $175. This is our website. We have AI based forecast as well as regression based analysis for Sol. The AI based forecast trend on Sol's price action starting at a weekly level starting 2020 April when the price when the token was launched. You can see over here on a log scale, Solana back over there was less than $1, has grown to about 175. This is again evidenced. It's a similar chart. We deal with logarithmic charts. The tokenomics about 580 millions of total supply, out of which circulating supply is at around 464 million. Does not have a max supply, but again most of the layer ones do not have that. They have a staking related, because it's a proof of stake and staking related crypto. There are staking rewards. Again, none of this is financial advice. Per our AI model, which was trained till about price action about today, this is the following 3 scenarios. The base case scenario forecast, week by week forecast, between $184 to $250 till the end of year, that is December 29, 2024. On the other hand, 1 standard deviation bull case, again this is a 68% confidence. That means per our AI model, the entire area, which is the blue, the yellow line and the green line, if you were to ask the model with a 70% accuracy, where could the price be in the next 3 to 6 months, the model has said that price action to the upside could be between $200 and $490. The downside is between $111 and $165. That's the 1 standard deviation or 68% confidence level. If you were to ask the AI model to increase its confidence to 95%, so where could be the price with 95% certainty? Again, not financial advice, but the upside for Sol is between $217 to about $862. Those are some lofty valuation, but that again with 2 standard deviation, that's usually what you get. The model likes to be more certain that the price will have 95% chance to be within these bounds. So the downside is between $41 and $150. So per my own analysis, again right now we are in the range where the 68% makes more sense than the 95%. That's just because we are not in a mania phase or in a bear market where you would get those violent 2 standard deviation moves. Coming back to the Solana's retirement related model, this is the realistic case at 15% growth for the next 15 years. If the that is, again you can see Sol has had 15% rallies within 30 days. So assuming a 15% growth year over year is definitely not too bullish or optimistic. In that scenario, with a 15% growth, one Sol's price without any staking or dilution is at around, forecasted at around $1,000 or almost $1,100, and the number of Sol token without staking to be a Sol millionaire today required are at around 911 Sol token would make you a millionaire in 2040, assuming Sol grows at 15%, stays relevant, and again no staking is involved. And 2040 is just 1 year. This chart allows you to look at different years and the number of SOL tokens on red axis needed to be a millionaire. Again, all of the content is available on the website. The name is on the bottom of your screen, cryptoweeklies.com, and you don't have to sign up or pay for anything. If on the other hand Solana manages to do half of what Bitcoin did over the last 15 years, that is grow at 22%, Bitcoin grew by about 45% over the last 15 years, then price of one SOL token could be at around $2,600, and the number of SOL token needed without staking SOL to be a SOL millionaire in 2040 would be at around 375. And if your timeline is not 2040 but like 2028, then again the number of SOL token needed would be about 4k. And if you, on the other hand, if you believe that a million in SOL is too much of an ask, and if you believe that 100k or 10k is more of your liking, you can divide the number of tokens for 100k by 10 and for 10k by 100. That is about 40 SOL tokens for 2028 10k, and 408 SOL tokens for 100k in 2028. So that's the key idea with this retirement related model. This is again not a AI based model, but more like a compound annual growth rate based model. We'll spend some time on analyzing the regression. This is the polynomial regression function, and the valuation of SOL per this polynomial regression function, if the uptrend were to be maintained intact, right now the valuation is at a really key level at around 2 standard deviation support. You can see this is the 2 standard deviation support. The fair value for SOL per this analysis is around $600. The 2 standard deviation floor is at around $179. The 1 standard deviation bottom is at around $340. So that's a key level to watch. If there is a further rally, then this $340 level becomes more and more interesting. Also, if there is a drop, the $94 is a key level to watch. This again is updated every single day. So if you're interested, please subscribe to the channel. Also give this video a like to stay connected with the AI based approach to forecasting. Last but not the least, these are the 3 models: the SMA, DC, and TWAP based model, to check what the risk levels with Solana are today. Per the SMA model, which considers the price and the difference between the price and 20-week simple moving average, per this model, the current risk level for SOL is at around 0.43. That means is the fourth best time to DCA SOL. This is just purely based on risk level, based on you can see over the mania phases the risk level gets more than 0.8. Similarly, during the bear market, the risk levels are less than 0.3. In terms of the DCA model, which considers not just the difference between price and moving average, this is the difference between the price and the fair value regression price. And per this analysis also, this is the price right now is in the lowest risk tier, that is between 0 and 0.1. You can see historically speaking, whenever we visit this band, that is the risk band between 0 and 0.1, that's a good time to get in. Similarly, when we visit the top band, which is between 0.8 and 1 risk, that's a good time to get out. Again, this is a continuously evolving model, so if there were a further downtrend, these valuations which are at low risk today might be moderate risk in the future. Again, that's the reason we have 3 models to determine valuation. And this is the time weighted average price model. That the key idea over here, when the price is below the time weighted average price, that's the best time to get in. And when the difference between the price and the time weighted average price is high, then the risk score is very high, and it's a time to get out of the SOL trade. Again, if you would like to know what are the current risk levels, you can check it over here. Right now the risk is at around 0.75. So just to summarize, per the TWAP model, the risk is at around 0.75, per the DCA model at around 0.03, that is again fairly low risk, and also per the SMA model 0.4 risk. So kind of in the middle of the pack if you take an average. of the three models. And in terms of the overall market, the SMA risk for BTC and ETH, which mostly drive the market, ETH is kind of right now in a moderate risk level, BTC slightly lower, 0.38. So the key idea with this is when there is a short-term bubble that is identified when the difference between the price and 20-week moving average for Bitcoin and ETH is the highest, that's when the likelihood of a short-term bubble is the highest. Right now we just visited in early week of June the lowest risk regimen when the price of BTC cratered during 6 to 7 and 8 of July. You can see that is evidenced in the risk score as well. This is a normalized risk score between 0 and 1. You can see during the first week of July till about July 11, the price was for the entire market was in the lowest risk, that is second lowest risk between 0.1 and 0.2. Right now the risk score is at 0.23. And with this I would like to conclude the video. Hope you like this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.